Sorry, before that, I've got my tip of the week, my trading tip of the week. So, good data, bad for markets. So, as you see sometimes, especially when central banks are involved in these markets, with their quantitative easing or quantitative tightening, markets, they just don't always react as you expect them to. And that can catch a lot of people out. So, when this good data comes out, the natural instinct is to buy the market. And obviously sometimes that's going to be right. But you get a lot of pro traders that will go the opposite way. And the reason for that is because they just expect, if the data's that good, that the central banks are going to be more aggressive with their rate hikes, which in turn will work against the economy and against the company's potential performance, because consumers will have even less spending power than they have at the moment. And again, when central banks are involved in these markets, as you'd have experienced over the last 2-3 years, since COVID, quantitative easing, quantitative tightening, that correlations can break. They often do. We as traders create a lot of these correlations. They're not set in stone. The only type of ones that are really that tight and almost, well, impossible to break because it's mathematically formed is something like, bond price versus yield. So again, these correlations, just be wary of them. They're good, but they're not perfect. Good data at the moment increases expectations that central banks will need to act for longer to tame that inflation, which means that rates will stay higher for longer. What you've got to remember is low rates are for a crisis, and they're not the normal situation. Okay, yeah, I'm old, so I've been in the markets for almost 50 years, well, 50 years, and I've seen it all. But when you look back, I've seen rates at 15-20%. What you're seeing in the last decade or two, a bit of them down at zero, is not the normal. So seeing rates at 4-5% for me is probably where they should be. It should almost be the lowest. But again, it's got to have some sort of a relationship, correlation with inflation. So they're going to go sort of fairly closely hand in hand, I would say. In the 80s and 90s, we saw massive inflation, even higher than we've experienced this time, I would say. But, so just keep an eye on all of this and really try and understand the macros, read books on it, do a course with me. I explain all of this. I go through all of this on my courses, the macro pictures, how to understand the macro, as well as, of course, just going into sort of just obviously the trading side of things to give you the skills that you need. And I also created a book that includes all the macro as well. So that might be something, again, you can always reach out to me if you're interested. Okay, now we're going to move on to the technical analysis. So, again, just a little reminder, black numbers in the right-hand column, support resistance levels I've identified, generally from trend lines. Brown numbers, they're going to be breakout levels. It might be a support level, but if it breaks through, then I'm expecting the market to go lower. Obviously, it's going to go lower, but I expect it to go enough to sort of possibly present an opportunity. Again, don't shoot the messenger. This is just the way I trade, and I sort of help my guys to learn how to trade. Everyone's got their own style. The claret numbers, horizontal levels I've identified, just as perhaps, where I can see that there's a lot of buying or a lot of selling pressure, or they could be based on double or triple tops or bottoms. Fibonacci, those just basic colors, always the same, so just keep an eye out for them. I think I've got possibly one lot on there, I'm not sure this week. Okay, so let's start and look at the Dow. So, stocks last week sort of almost flatlined. They up and down a little bit. No one was too sure what was going on. This week, I expect them to move with this inflation data coming out. So for the Dow, I've got resistance at 34,321, support at 33,028. There's one of those brown lines below that at 31,969, which is a breakout level. So if it was to break through there, I would expect the market to go lower. And you can see why, because on the left-hand side, there's not really much to defend that level. On the 30-minute, I've got resistance at 34,263. I've got a breakout at 33,942, support at 33,683, and 33,543. For the S&P on the daily, I've got a resistance level at 41.67. And then I've got support at 4,026 and 38.24. So again, just keep these in the back of your mind, or take screenshots of them, or take pictures with your phone, just as reminders, because as the data starts to come out, we could see some quite big moves this week. That'll bring the dailies into play. The 30-minute ones would have already been broken one way or the other, I would guess. So on the S&P 30-minute, I got 41.70 as resistance, also 41.04, and I got 4,070 as a support and 4,026. And I left the pivot points on there because you can see that S1 worked really well on Friday. It was a great level. Again, if you don't understand pivot points, come on one of the workshops I do, and you can find out all about them and other stuff that I use. Okay, Nasdaq daily. I've got resistance at 12,640 and support at 11,866. On the 30-minute, I've got resistance at 12,723, 12,449, and 12,348, with support at 12216. Okay, so moving on to the Russell 2000. Just remember, these are small mid-cap stocks. I've got resistance at 1968 and support at 1882. On the 30-minute, I've got resistance on the Russell at 1968 and 1927. And I've got support at 1911 and 1907. Moving on to a couple of currencies. So here we're looking at the pound against the dollar, also called the cable. I've got resistance at 123.78 and support at 119.16. So yeah, quite wide, sort of moving towards the lower level of that range. Again, it's just going to really depend on the data this week to how the dollar performs. So with the 30-minute, I've got resistance at 121.28 and 121.17, and support at 120.53 and 119.74. So they're much tighter levels. So moving on to the euro against the dollar. So I've got resistance at 109.62 and 108.25, with support at 105.23. It did at that moment where it popped through 110, but it couldn't hold that. That was after the central bank's meetings. And now, when we look at it, if we go forward to the 30-minute, so there's a lot going on in this chart. So okay, so first of all, let's select some levels. So resistance 108.25, 1.0810, 107.49, and then I've got 107.30 because I believe that's the neckline of a head and shoulder. So here I've got one shoulder, here I've got the head, and here I've got the other shoulder, and this is the neckline just there. So just thought I would highlight to you. And I've got one more resistance level at 106.98. And then I've got support at 1.0685. And as you can see, that it held there well on Friday using the pivot point S2 level. Okay, moving on to Bitcoin. So resistance 23,669, support 20,440, which is also a breakout level. If it should get through there, I would expect it to at least fill that gap. On the 30-minute, I've got resistance at 22,503, 22,133, and 21,795, with support at 21,506. So, you know, yeah, last week wasn't a great week for crypto. It's been moving down, finished towards the lows of the week. But again, we'll have to wait and see what happens this week. So here's the stocks, NASDAQ versus Bitcoin. You know, just looking at the correlation between them. Sometimes it holds in quite well, sometimes it doesn't. And, you know, if you're looking at these types of things, I think it's more just for perhaps an indicator, just as a visual thing, not necessarily to trade off of these things. But sometimes there can be opportunities, but, you know, you've really got to do your research, and always when you're going to look at a new something or other to trade, just make sure you practice with a demo account first, get used to it, get the feel for it before you try and do it live. Okay, so gold. So gold sort of pretty much ranged during the week. Here we've got 1904 as resistance, and 1797 as support. There's also that fib support level in there, the first one that I've put in, which is 1850. So, you know, if the market does, gold starts to come off a bit more, then fib levels could come into play quite well. On the 30-minute, I've got resistance at 1898, 1877, 1876. I've got support at 1872 and 1868. So I've got lots of messages last week. I think probably more from my newsletter than from the videos, but just congratulating me on some of the levels I picked last week, especially on gold, because they worked really well. Which is obviously very nice to hear. The fact that people are looking at them, let alone using them. So that's really good. And just finally, last but not least, is WTI. So, you know, with oil cutting production, as they said that they're going to from March, that did steady oil during the week, as you can see. And it sort of went from the 72s all the way up to test 80s. I've got resistance 82.70. I've got support at 73.50 on the daily. And then finally, looking at the 30-minute, I've got resistance at 80.09 and support at 77.58 and 74.80. And again, on Friday, the pivots worked well. You can see that it was sticky around that support level at the start of the day, and then as the day went on, it moved all the way up there, which again, you know, was based on the Russian cutting supply from March of 500,000 barrels a day. And also the fact that OPEC said that they're not going to try and replace that cut. They're just going to leave supply and demand as it is naturally. Okay, so just finishing up with what we do and how we can help you with your trading. Of course, we provide this every week to try and help you prepare for the week ahead. It highlights things, lots of things that I hope you find useful. Gives you a bit of insight into what's going on, especially with the macro picture. It's one of our massive strengths, but plus technicals. When you've been in the industry as long as I have, then obviously you develop a lot of skills, and also you learn from other people as well. And we obviously provide a daily newsletter. This includes global news, headlines, my views, and also you're getting fresh daily chart levels and fresh pivot points each day. So why not sign up for it? Just go to our website, you can find it there. One-day workshops, just to help you fill in some gaps, where you may be a little bit weaker with your trading. Happily to go through them with you. I'm always happy just to design something individually, customize it, especially for someone if they want to do that. And then, of course, we've got our 1-week courses where we can take you from 0 to hero. By the end of that week, you'll feel very comfortable with your decision making, understanding a lot more about technical analysis, risk management, trading techniques, trading psychology, etc., etc. And then if you really want to turn trading into a career, then our masterclass is the one for you. It's an accredited course. It's 4 weeks of guided learning. You do not have to take them all in one go, though. You can split them up, and also we do offer a payment plan, but of course you only pay for the weeks as you're taking them. So that provides you with all the fundamental knowledge you need, plus all the trading techniques and trading skills you're going to need to sort of navigate today's markets. And all of this, if you've got an inner trader inside you and you don't know it yet, trust me, I will find it for you. We'll move on. Trader mentoring. I help traders at all different levels, from beginners all the way up to very experienced traders. Everyone gets a slight issue sometimes with their trading somewhere, so I help clear that up for them. We consult to companies on hedging and on various other aspects. We also provide trader educational content, not just to individuals, but to exchanges, to brokers, and more are coming to us on a monthly basis to ask us to provide them with content, and also to help them educate their existing customers more, which is great. It's nice to find brokers that actually want to help their customers to be more successful. And if you don't have the capital to get into trading, then you can try and qualify for a funded trading account through our partner, which is great. What an amazing opportunity. You qualify and you can use their money rather than yours. Now, if you've got any questions whatsoever about courses, about trading, then here's our contact details, info@symaxfintech.com. Or if you want to direct any of your trading questions to me personally, then chris.tubby@symax-int.com. I'm always around. Just email me, ask me any questions, or if you want to have a discussion about how I can help you to improve your trading and be more successful, then reach out. Please reach out. And all that's left to say is have a great week and be lucky. Hope to see you next week.